Interest on securities, Section 193. Now, any interest that is paid on securities is covered for tax deduction under Section 193. So what we should learn as a part of this particular section is who all are liable to deduct tax under 193 and who should be the payee, who should be the recipient of income. Second is which payments qualify as interest on securities. Third is what is the rate at which the tax has to be withheld and what is the minimum threshold for deduction of taxes. What is the time when tax has to be deducted and what are the exemptions or cases where TDS is not required to be deducted even though it may qualify as interest on securities. Now, the parties involved in any transaction is a payer and the recipient. The payer in this particular case can be a local authority, a corporation, or a company, and the principal officer of such company, corporation, or listing. They are covered for TDS under Section 193. Second could be that the payer is the central or state government. Even they are covered under Section 193. The recipient, if he is a resident, is covered under Section 193, but if the recipient is a non-resident, the TDS has to be deducted under Section 195. In other words, where any of these persons make a payment to a resident, that is covered under Section 193. But if they make a payment to a non-resident, the withholding tax implications have to be decided as per Section 195. Now, the timing of deduction is at the time of credit or at the time of payment, whether the payment is by cash, check, draft, or any other mode, whichever is earlier. In case of credit, if there is a credit to a suspense account, interest payable account, or any other account, even that would amount to credit. Now, let me give you an example on this. Suppose I receive a bill from a company for 100,000, or actually not a bill. Let's say, for example, I get interest on securities amounting to 1 lakh from a company, right? The payer at that point in time, when they accrue the interest in their books of accounts, will be liable to deduct TDS on this amount, because at the time when they accrue, they would have credited the account of the recipient. In some cases, there may be some advance payment of interest. If there is an advance payment of interest, then the party account is not credited, right? In that case, if the advance payment is made earlier, whether through a cash or a check or draft or any other mode, in that case, the TDS has to be deducted at the time of advance payment. But if the TDS is deducted at the time of advance payment, then whenever the credit happens, we will need to reduce this credit to the extent TDS has already been deducted on advance payment. What is the rate of TDS under Section 193? The general rate of TDS under Section 193 is 10%. There are various payments which we have covered in the next slide where this has to be applied. But if the recipient does not give the PAN number, if the PAN is not provided by the recipient, then the withholding tax rate will be 20%. However, in all these cases, if a lower withholding tax certificate is obtained under Section 190, there may be a case that the reduced rate may be available. So what is the rate of TDS? In case of a person other than a company who is a resident in India and they pay interest on any of these 4 categories, they have to withhold tax at the rate of 10%. So for example, a person other than a company, if they pay interest on any debentures or securities other than security of a central government or state government, for money issued by or on behalf of a local authority or a corporation established by a central, state or provincial act. Right? TDS rate is 10%. If there is interest on any debentures issued by a company where such debentures are listed on a recognized stock exchange in India in accordance with the Securities Contract Regulation Act 1956 and any rules made thereunder, the TDS is again 10%. Interest on debentures which are not listed on a recognized stock exchange. So suppose there is interest unlisted debentures which are there. The TDS will be 10%. 8% or 7.75% savings taxable bonds, TDS is 10%. Where the payment is made by a domestic company, any interest on securities will be liable for a withholding tax of 10%. So effectively, if you see in all these cases, the withholding tax rate is 10%. Like I said, before we move on to the next slide, if the PAN is not provided, then the rate will be 20%. But this is also subject to some deductions or some exemptions, where the TDS may not be required to be withheld. We will come back to it in a little while. First question is, what is interest on securities? Section 193 covers payment in the nature of interest on securities. Now, interest on securities will basically cover interest on debentures or other securities issued for money. Means that if you have taken money and you have issued these debentures or other securities, and who has issued? By or on behalf of a local authority. A local authority is the issuer, a company could be an issuer, or a corporation established by a central, state or provincial act could be an issuer. Either of these three can be the issuers. Second, interest on securities of central or state government. If the central or the state government issue any security, on that if you pay interest, that is covered as interest on securities. Of course, there are some exemptions in which cases the withholding tax may not apply. So which payments are exempt from deduction under section 193? The first one is central government notified debentures issued by specified authorities. The central government has notified certain authorities, and if they issue some notified debentures, there is no withholding tax requirement on them. Interest on any security issued by the central or state government. Securities specified in proviso to section 193, and interest payable on a listed security issued by a company in dematerialized form as per the Securities Contract and Regulation Act. So if there is a listed security which is issued by a company in a demat form, provided the guidelines of SCRA are met, even debentures, listed debentures could be there. The interest on that is not required to be subject to withholding tax. There are certain other recipients who are exempted. So if there is any interest which is payable to LIC, the Life Insurance Corporation of India, the General Insurance Corporation of India, or any other insurer on securities which are owned by them beneficially, that is not something which is going to be liable for withholding tax. Interest paid or payable by a widely held company. Now, you know what is a closely held company and a widely held company. You can go and look at that in section 2, right? On listed or unlisted debentures to a resident individual or an HUF. So if there is a widely held company, they pay certain interest in respect of an unlisted debenture or a listed debenture to an individual or an HUF, and they pay the amount by check and the total payment does not exceed 5,000, then there is no withholding tax. Interest payable on a listed company security in dematerialized form. So let's say, for example, if A Limited is a listed company, right? It issues a security in demat form. The interest paid on that is something which is not going to be liable to withholding tax. Interest on 8% savings, taxable bond 2003, or 7.75% savings taxable to bond 2018 issued by the central government to the extent of rupees 10,000, which means if on these bonds also the interest that you get is greater than 10,000, then the withholding tax will be applicable. Payment to new pension system trust referred to in section 44F or other bodies notified by the central government. If you make any payment of interest on securities to them, there is no requirement to withhold tax. Some of the other issues which are relevant in the context of interest on securities are cumulative debentures per bond. Suppose there is a debenture of 100 rupees which is issued. At the end of the year, the interest of 10 is credited to the and 110 is the total amount which is due. In second year, again 10 is credited, 120 is the value of the debenture. It continues so on until the value reaches 150 when it is redeemed or it matures. In such a case, the tax has to be deducted at the time of credit and not until maturity. What that means is every year when this interest is credited, you have to deposit TDS on this. A cumulative debenture is a debenture in which the interest keeps on accumulating and is paid at the time of maturity. Pay declaration for non-deduction with PAN. So if the recipient of income gives a declaration, I'll come to what declaration they give, and they also provide their PAN number, then in that case, they may not be liable to withholding tax. Non-company recipient, which means if the recipient is a company, the withholding tax will apply. In Form 15G, provided aggregate not likely to exceed the maximum amount not chargeable to tax. So if the maximum amount which is not chargeable to tax in case of an individual is, let's say, 2,50,000. As long as the interest which is paid to him is less than this amount and this person gives a declaration in Form 15G, withholding tax will not apply. However, for individuals who are aged at more than 60 at any time during the year and who have given a declaration in Form 15H, these provisions will not apply, provided they give their PAN number, right? So the assumption is that all these people who want to claim this exemption have given their PAN. Deep discount bond. In case of deep discount bond, unlike the cumulative debentures, TDS is deducted only in the year of redemption. So I told you in case of cumulative debentures, it has to be at the time of credit, but in deep discount bond, it has to be in the year of redemption.
Thank you for watching this video. If you like this video, you can subscribe to our channel to stay updated on more such videos. You can like these videos and also share it with your friends. And if you're looking for material on this particular subject, you can visit us on our website at www.arinjayacademy.com.